Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, December 15th, 2009. Well, folks, you can see from the market that we've kind of just been fluctuating up and down all around. Now, what we're really seeing today is a generally flat market. In fact, the Dow is down about 30 points, the Nasdaq is up a point, and the S&P 500 is down about 3.5 points on the day. So you can see the Nasdaq overall is slightly stronger than the rest of the indexes. Now, the real kicker today was the inflation data that we got out from the PPI report. That's the Producer Price Index report that told us today there was a creeping in of inflationary concerns out there. All right, and what we saw was the PPI creeping up a little more than expected, and again, that tells us how much producers are paying for their goods before they sell it to the consumer. Now, we'll get CPI data later this week, which is Consumer Price Index. So again, you look at the producers, how much they're paying, and then ultimately later this week, we'll see how much the consumers are paying with that CPI data. Now, overall, it didn't have much of an impact. Today, we see the dollar is slightly stronger on the day, having a little bit of an upward move, and today the market has started out to the downside with a little bit of selling into good support, then rallied all the way to a nice little gap fill area, and then was a beautiful shorting opportunity down to this little level of support, as you can see right here. So I'm going to go over the technicals on this chart, then we're going to take a look at some other stocks out there, some of the leaders as well. Now, again, as I mentioned, we gapped down today to this 111.50 level. Now, the 111.50 level to the 111.35 is a major support area. You can tell it's support because yesterday's low was right in there as well. So, number one, right off the bat, you have to know that's double bottom. Double bottom is a key technical level that you always want to be looking for. Double tops, double bottoms, utilized correctly, can be very profitable. In this situation, what we did was call out a buying opportunity in the intraday stock chat to our premium members, and of course, those in the research center, which are more the educational, longer-term investor players, they had that exactly. We teach that stuff every night in the nightly videos, as well as educate on the markets and what to expect. But in any case, what you can see here, folks, not only is this level yesterday the double bottom, but if you extend that pink line right here, look at 2 days ago what you had. You had a double top right there. So you can see how that level is a very, very key level and should be thought of as a major bounce opportunity in the markets. All right, and again, you can see going back to last Friday, double top right there, hit it, pulled back, hit it again, pulled back, and then we gapped above it on Monday, pulled back into it, and that's your buying opportunity for Monday. Sure enough, what happens today? We gap down right into that area today. That's your buying opportunity for today. So you can see double bottom working very, very well. Now, the next play was called out in the intraday stock chat as we patiently waited for the markets to rally up, and it was a beautiful rally. They basically cut the losses from being down about 50 points or so on the Dow in about an hour or so to go flat to positive here. Now, the key again was to know your gap fill. That's another key level to always watch for on charts. Now, it can be on a daily, weekly, monthly chart, or it can be on an intraday chart like this one. Now, again, right here, you pierce gap fill, and this is where the level was called out, right above that level. Now, I always wait for the pierce of the level because you always get a better entry that way. So at a pierce of that level at 111.90, we called out you could go short on a gap fill level there. And sure enough, look at the market trail down the rest of the day. So really, we nailed the lows and the highs on the charts today, and all it was technical levels. I mean, that's all it was. It wasn't any genius work. We just utilized the charts and listened to what the charts were telling us. And I always say that this chart is like a book. You just have to understand the language and read it, and then you can understand it all. All right, so again, there's your short right there. The market pulled all the way back right into this little bit of a thick yellow trend line, which again is the 111.50 level, a very key level, and look at the bounce you're getting off of it right here. Now, this bounce is also coinciding with a little bit of a drop in the dollar. Dollar's coming in a little bit, and that's coinciding, but notice how the levels all coincide on a technical basis. Now, again, the key here was this, guys, and I put out something on the free Rant and Rave blog, which a lot of you guys follow, and you should all be following intraday, but I put it out right around 11 o'clock, a little after 11, 11:15 or so, and you can go take a look, and I said, take a look at this market, and this was as the market was high, and I just called a little short, but I put out the fact that you saw some of the leading stocks out there very, very weak, and that bothered me, and that told me that there was a high probability we would come back in addition to gap fill, and you have to look for these little signals in the markets because it's very, very telling of where the next move may come. Now, what do I mean by that? Well, for instance, earlier in the day, I noted that Apple was down. That's a leader in the tech stocks. Goldman Sachs was down. That's a leader in the financials along with JP Morgan. In addition, ExxonMobil earlier was down as well, and that also told me that there was expected to be weakness. So again, all those, as we were hovering at gap fill, those leaders were telling us a signal, and you have to be listening to those signals and let them speak to you. And in that situation, it's a very, very high opportunity to go short with a 90% success rate of a trade there. And again, I just want to repeat that all of these levels and everything I'm talking about applies to every chart out there. It could be Forex, it could be futures, it could be commodities, it could be stocks, it could be ETFs, markets, doesn't matter. You could chart anything out there, folks. And all these rules that we talk about in our premium services to the Research Center and to the Intraday Stock Chat, it applies to everything. And again, in the nightly videos, I spend 40 minutes like this video, except more in depth on all time frames of everything that we discuss here, going over how to learn, how to price the market, how to understand everything, and obviously giving you my guidance, my premier guidance on where I expect tomorrow to go, where do I expect the markets next week, next month, next year, etc., on all time frames. So again, I do recommend you go join that Research Center. It's going to just open your eyes to a whole new world of profit. And again, a lot of people have already discovered it and continue to discover it. Now again, just note here, you're getting a little bit of a bounce. If you move up, you're going to look for resistance right around this level right here. You have this pink trend line plus this 50 moving average coming into play. Let's take a look at Apple Computer. Apple overall is down about, I don't know, looks like it's down about 80 cents or so today, 80, 90 cents here. You can see when the market rallied, it went to gap fill as well. Nice double top right there. That's also a shorting opportunity on Apple, so it gives you an idea there about some resistance. In addition, you can take a look at other stocks that are on the weak side. Goldman Sachs, guys, look at Goldman Sachs. Goldman couldn't even get a rally when the market rallied. In fact, Goldman was making new lows, which was a direct signal that was going to be a seller to the market and cause the markets to come in. Now, again, by all means, the markets are not selling in a major way. I mean, let's be honest with that. Right now, you have the Dow down 25 points, NASDAQ up 1.5 points, and the S&P down about 3. So it's really a mixed market again today on the back of a little bit of a gain. We've really had gains for multiple days now in a row. But here you have Goldman Sachs. Goldman Sachs right here came back in and actually took out this double bottom, pierced it, but then look at the bounce. The bounce took you right back there. Nice inside bars, broke through, and then came right back in. You can see it's really hovering around that lower level. If you go to the 60-minute on Goldman Sachs, obviously you have a little bit of a pattern here development, but overall the big spot to watch on this Goldman is you have a little support right here and then double bottom down here. Resistance on Goldman would be these spots. All right, those are your levels. And again, I just do this, I do it in my sleep now. That's why I can do it so fast, give you these levels. Ultimately, as you guys learn, you're going to have to study the charts a little bit more. But as you watch the videos that I put out in the Research Center and are in the chat room, you're going to just learn over and over the key stuff. I mean, it's just going to come to you faster and faster. You'll wake up one morning and be like, oh, that's the resistance. Bam, make money. That's the support. Bam, make money. That kind of stuff, okay? So again, let's take a look quickly at JP Morgan. JP Morgan's down nicely today. What I like about JP Morgan, and this was a no-brainer, guys, take a look at the low on the chart today. Look familiar? Was that a buying opportunity? Pierce the level. Remember, you wait for a pierce right down here, maybe around that 40.65 level. Bam! Look at that bounce. All right, all you're doing is looking at support resistance. That's all a trader does or an investor does. An investor buys support, sells resistance. That's it. All right, that's all you have to do. And again, you can manage your 401ks, your IRAs, I mean, your investment accounts, your retirement account, any type of deal out there can be managed on this principle. And you know what? When you think about the markets of the last 10 years, the markets basically are flat for the last 10 years. I mean, you go back, especially when we were at the lows. Now we've rallied off the lows a little bit. But, I mean, think about that. Think about managing your money here and making so much more than getting it all wiped out over the last 2 years. I mean, that's really the bottom line. You know what I do? I'm in the market, and then I'm in cash, or I'm short the market. Then I'm back long, then I'm short. Multiplying the gains out, a good day trader should make 3, 4, 500% a year minimally on his market. A good swing trader, well, then you're talking about 100+% a year. You should be able to do if you're a good swing trader, at least. All right, some swing traders can do more, some do less, depending on your level of expertise. But it shows you that you don't have to let the market just sit there and do whatever you don't. You know, it does. You don't have to sit back and just let it happen. So, again, I stress that very much so, folks, in understanding the markets. It's there for the taking. You just have to understand it. And in our Research Center, you'll get all the tools to do that and progress as a swing trader, a long-term investor, or a day trader. Take care, folks. Have a wonderful rest of the day.